All right, guys, Joe Saglimbeni back. It's been a little while, but I decided to come back and do a little video. I've been real busy, but should be a good video. And I'm going to finally update my stock portfolio performance for the last 10 years and how it has compared or how it's compared to the S&P 500. So this should be a good one, guys. Let's get to it. All right, guys, it's stock market performance time. So before we even begin, I just want to say this is not financial advice. I am not a financial pro. This is just my portfolio, my opinion, and my stock picks against the S&P 500. And we're going to go over the decade, the last 5 years, and then I'm going to show a little bit of individual years. Actually start with that first. But just want to explain a little bit of how I invest before we get to those numbers. So, if you've listened or watched my YouTube channel or came across my blog, I am mostly a dividend growth investor. I hold a small portfolio of 12 to 20 equities, stocks, and I usually pick them, find them, pick them, and hold them for a very long time. I don't really trade a lot in my IRA account, my Roth IRA. So I usually just stick to purchasing more or buying more if there's a dip in the stocks during the year. If there's a dip in the market, I decide which stock needs a little bit of which is a good which stock is a value type stock at the time. So I pretty much buy and hold, let the dividends reinvest, and then when the market corrects, I make more purchases. This is what I do year over year. Once in a while, I'll change and sell a stock, but I've been doing it for many years this way, reinvesting the dividend, letting the dividends grow, and it basically has worked well for me. And I will get to some of the stocks, I think, at the end of the video. But let's get to how I have individually performed for the last 10 years. All right, so I'm going to put a little thing up here onto the screen. And this is going to basically show every year for the last 10 years, up to, of course, 2021, from 2011 to 2021. And what's the good thing here is I have not had a losing year for the last decade. I've not had a losing year. I've had a tough year in 2016 and a tough year in 2018, but a fantastic year during the pandemic 2020 year with 44% return, and a good last year 2021. And this is basically my performance each calendar year 2011 to 2021. So right there on the screen, there it goes. So obviously my portfolios did pretty good. Now, I'm going to do the last 5 years right now. And the last 5 years, my Roth IRA for the last 5 years versus the S&P 500. All right, and in this case, Did I or did I not beat the the S&P 500? Well, let's see if I beat the S&P 500. Not only did I beat the S&P 500, but as you could see, I took care of the Dow Jones, I took care of the Nasdaq, and as for the other ones, those are more balanced bond type indexes. So basically, I trounced the S&P 500 for the last, on average, for the last 5 years. And when I get into my portfolio, I'll explain how I think it's how it happened and what makes a well-diversified portfolio beat the S&P 500. So let's take a look as we continue this process to how I did for the last decade. And this is the big one, really. So this is going to be my portfolio in my Roth IRA for the last decade ending in 2021, annualized returns versus the S&P 500 and some other indexes. So on the screen right there, you can see I've averaged over 18% per year for the last decade. All right, the S&P 500 is over 14%, the Dow Jones is over 14%, and the Nasdaq, which is the riskiest of the bunch, has performed at 17% per year for the last 10 years. So I have outperformed all three of the major indexes for the last decade. And, even I'm actually surprised with that because I thought beginning of 2021 it was going to be a difficult year in the stock market. And actually, it turned out okay. I did not beat the S&P 500 or the Dow in 2021. But overall, because of the diversity of my portfolio, I outperformed the last decade annualized against these indexes. So, I mean, to me, I got to tell you, I can't be much happier than that. Because you got to understand, you had the pandemic. And I stayed steadfast with these stocks. And when March, April of 2020, when there was a correction, I added a little bit more money in my Roth so that hopefully, that it would boost my returns. Since my portfolio is not that large, I only have about 12 or 13 equities in my Roth IRA, I didn't perform as well as the S&P 500. And I think that comes down to the fact that the S&P 500 did better than, let's say, the Nasdaq because I have kind of riskier stocks in my portfolio than the full market. I mean, if you have 500 stocks, you're going to kind of handle the up and downs better than a tighter portfolio of what I have. So let's get into my stock portfolio a bit. I'm just going to get into a couple of the equities that I have, in my Roth that are my major holdings. Now, I'm not going to go into performance with them because I don't have those numbers right now, but let me explain which ones I have. So I have my major holdings. My top, like 4 or 5, are MasterCard, Apple, Costco, Nike, and like Union Pacific. Those are like my top 5 stocks. And, Union Pacific's a railroad. Nike is what I consider almost the perfect stock, a retailer apparel company. Costco is obviously the large retailer for wholesale shopping. Apple is another company and stock that has a brand similar to Nike that people just want to buy their products. And MasterCard. Now, MasterCard has been tough. I think MasterCard is starting to have some competition with Square, PayPal, and other type of credit or payment type of solutions. So I may have to look into whether or not I have to change, my position in MasterCard. But it pretty much did okay. And that's basically the stocks, the top 5 or 6 stocks, 4 or 5 stocks in my portfolio. I have a 12 stock portfolio that pays mostly dividends, that grow their dividends every year. And sometimes they even boost them, like Costco sometimes does a special dividend. One of my holdings, T. Rowe Price, does a special dividend. Even I have the liquor company, Brown-Forman. Once in a while, they do a special dividend. So these dividends are reinvested and they boost the returns and they buy more shares of these companies that I feel are great long-term holdings. And again, guys, I'm going to continue that path. I'm going to continue to do that. Find these big name brand companies with massive market share that raise their dividends year after year and basically beat the competition. And that's it, guys. I thought I'd do a little performance update from my stock portfolio. And, guys, let me know if you like some of this stuff I do with my stocks and my stock portfolio. And, of course, comment what you think. And always like, share, comment. Let that algorithm work for me. And guys, I enjoyed this one, and I hope you enjoyed it. And hopefully I'll see you again real soon. Have a great one. Bye-bye.